Straight to the back testing session right here. Let's look at the daily real quick. Currently trading inside this CB right here. And could get some type of retracement because this current daily candle don't even have a wick. So I'm kind of anticipating for price to probably want to rebalance inside of maybe even this inversion inefficiency right here and possibly continue up higher, or we could go down lower to reach that low. Because we do have relatively good lows with this low over here and then this one. So let's keep that in mind. Let's go to 15-minute though. So I do see that we got this relative equal highs up here. So I mean, if 730 wants to manipulate down first inside of this inefficiency here, this bullish one, then we could be wanting to trade up here. But if we open up, or like we did now, but if we manipulate higher first, take out these buy stops, then I'll go ahead and look for shorts. Especially us being inside this daily range. So we could just trade on to here, push up and then push down, or push up and then push down since we inside of that city. But really we still remain in neutral. Let me change this. Let's make this color. Now we go back up to here real quick. Because we could just come to this high as well and then decide to want to push down. Because if I go out to here real quick, this is our opening range. The low to the high during the first 30 minutes of the pre-market range. And then, yeah, let's go here. Boom. Then we can do this. Then, yeah, this fib lines up with up here. So ideally, we want to see this run up here, but it could just take out the opening range high and then decide to drop before we actually want to push up. And this high can be taken for 930. So if we want to push down, then this is lining up with this bullish inefficiency over here. So that could lean towards price want to push down if we take out this high to run into this and then possibly want to move higher. So let's just play it out for a little bit and see what goes. Okay, we come right up to that 0.5 right there, inverting that small inefficiency right there, which now indicating that we could be bearish from here, but we have to wait for more confirmation. All right, let's want to push up a little bit more. All right, cool. I like this setup. We pushed into here, failed to want to reach this, which is fine. But now we're coming back inside this range after taking out buy stops. So now this is the model right here. And we inside of the macro when we take a look at time. So time and price is what matters right now, which we got everything we want to see. And now we could keep stop above the high, but I don't mind having it here. Or even, you can even have it above here, but this candle don't have a wick high, so preferably put it like here or at the high. But we should honestly come back all the way up here. Most I let it come back is probably here, or it can come and take out this minor high before we decide to want to push down. Then we could just target this here, or you can target 1 to 3, depends. But we'll just go for this right here. This is the A+ model. All right, so we got below that. This is not what I want to see. So I'm gonna put my stop just above the opening range high, which is this right there. So all in all, I want to see if this can get bearish from here and try to reach for these lower levels. So let's see if we get that or we get a break even. All right. So I do think we're gonna push down here. So I'll just move it here and then let it click through. Let's take this 1 to 3. Especially how you could. One thing I want to go back into too. You could have also scaled in this position. So yeah. Oh, I forgot to turn my stop. Damn. And all in all, this would have been the better uh position to get out. But as you can see, that would have happened after. So wait, what time was this? What the? Do we have news at that time or something? Oh, we had 8:30 news. Uh, hold up. Oh, I didn't mean to do that. Um, all right. So even if you, this would have, it's supposed to trail it there, but it is what it is, right? But just know this is the A plus model. Yeah. So in the real conditions, I would have been out before the 8:30 news. So at 8:30 here, realistically, I would have to get out a minute before. So I'd have to get out. I was just trying to see how it played, but yeah, I'd have to get out a minute before. So this is the 8:30 news. So I would have said getting out, maybe even like on this candle on that, somewhere in here probably. So would have not left with much, but uh, yeah, just really want to continuously see the model play out. But if there's 8:30 news, always try to get out your position like a couple minutes before. Let's get rid of this. Well, I mean, we still got time to see what happens, but it is crazy right now, so let's just see. Man, it's that manipulation to that -1. Now we could push back into here and then probably go bearish, but who knows if we could come back in there. Yeah, it's about to be 9:30, so let me just go to the next day. Had an overnight push to the downside, and now we're inside of this bullish inefficiency right there. So, but let's look at the daily real quick. Daily still respecting this bearish inefficiency, so we could now that we traded down to this one. Now this can either play out both sides of the range. This can either invert this bullish inefficiency and try to work for this low, or we remain bullish out of this bullish inefficiency right there to then potentially like rise up and probably take the previous day high out, which is this, because we took out the previous day low, right? If you look at the candles here, took out that previous day low that didn't have a wick. So now this might want to wick and then probably start pushing up. But since we did have that overnight push, we could have some type of continuation in the pre-market, maybe even down to this candle candle high right here. And I'll just make that black. All right, let's go down to the 15-minute. So yeah, got this, and then continuation. So this could be set for the model continuing down, especially since again we had that overnight push. Yeah, we in a strong discount, but when we have these overnight pushes, kind of want to look for the continuation. That's kind of what the market, not kind of, but that is what the market is showing me. So kind of following that play. But do keep in mind we did take out this low, so we could have another retrace to this high at least to then probably continue down it. So we could go bullish from here, take out even this high or all this, where all this liquidity is generated. We could come inside of there before we actually want to continue down. especially after we taken out this low. Got that. All right. All right, let me get the 15. Let me get the opening range. That's the 7 a.m. high. That's the low. Boom. And I just realized the last one I didn't even put my 730 first presented for value gap, but honestly, all that stuff is just extra confidences. All right, let's put this here. That's the opening price. And then let's put the opening range on here. Kind of line up with this low. We'd have to overextend this a little bit, obviously. And I'm sure if this is like a 1.5, like this right here, see, yeah, negative 1.5 lines up perfectly with the low. So, yeah. But these two standard deviations are like my top favorite ones to use. So let's just see what we get. All right, so now we got this trade back into the 730. So this is where it can get a little tricky because sometimes we don't have to push up. The opening range here, this is already a follow through continuation move. And now we just pull them back and we could follow through and come for these standard deviation levels. Especially since how we trading at this 0.5 area. Boom. Now we got below that. And now, I mean, we obviously got a 1, 2, 3 to the downside here. So, I mean, you could take this, but I mean, we so close to the low where we can just take out this 730 low and then continue. But I kind of want to test this out and see what and how it plays. But let's see what kind of risk to reward it gives us. To here. Probably midpoint away, halfway. Let's try it out. Let's just try 730. Then we got the 730 up in the price. So yeah, let's just see. All right, there we go. I got that. So we could just trail it to that high until we get another 1, 2, 3. All right, boom. We touching that level here. So this is where we could get strong back up to the upside. Since we did take out that low, created another 1, 2, 3. Now we just trail up, stop again. So let's just see if we make it to this 1 to 3 level. All right, nope. So I'm gonna actually look for a continuation model right here. Well, let's see where we at. We inside of that inefficiency. Now let's see if we let's see what's going on. It's inside this 5-minute bearish inefficiency. I mean, we did get above here. Let's see how we got no news today, Thursday. This the day before NFP, that's why. Yeah, non-farm payroll. The first day of every month. I kind of want to test this out to see if I can get this set up back up to the, like, even if I measure out the entire range now from here to here, equilibrium was right at that 0.5. So got the market structure shift after taking out this low, hitting the 0.5, and then rallying up. So this could, I mean, this is the model because we have the low taken out, boom. And we already had the major liquidity taken out over here. And then we inside of that higher time frame bullish inefficiency right there. Then I'm gonna go back to, let me show you this right here. So I kind of want to see if this can push back up at least to this high, or we have this high inside of that opening range. So this can be a pullback to that level before we might want to continue down again. And really, this is the entry. Soon as we close above this high, but again, we are in some inefficiencies. But if you bullish, you never really want to worry about that because we've already had a continuation from these inefficiencies, right? So Push down, pushed up, and then drop back down to that 0.5, and now we displacing up higher. One thing I don't like though is I think we got equal lows there. No, we don't. We took it out by a little bit. Oh, now it works. So this is the low, 25,511 to 25,11.2. Yeah, so we did push a little lower there. But yeah, this is the close. So you can either wait for the fair value gap or get in on the close. I'm gonna do it on the close right here. And then you can choose your stop. I say the safest place is probably right below that 0.5. Or you can put it below the main low. Because it could just come back down here, tap this, and then push up. Now, it's not the best risk to reward. So as long as you can get like a nice 1 or 2 out of this, like right here. I mean, you just gotta see how it trade afterwards. Again, though, this can be a little risky considering we overall we bearish. This is like trying to buy a falling knife, right? But we hit a key level inside of a higher time frame PD array that can ultimately send us back up higher inside of this premium PD array. So if I were to get rid of all this just for a second, and then you look at premium and discount, you can see the red line right here, which anything above that is premium. So we can target this premium gap right there. So that's why, like, if you bullish, bearish, you always kind of got to build yourself a narrative to what and how you feel about price and what it can possibly do. Well, honestly, I kind of want to see if I can aim for this buy stop with a smaller stop. And I'm going to put it below this inefficiency right there. Like this, put it below this candle low to try to get this 1 or 2 because we've already cleared the 1, 2, 3. So we pushed up. If we really bullish, I mean, we could come back for the low, but we shouldn't if we're extremely bullish right now. So I'm gonna just take this. Usually I do only one trade, but I just take this for the back testing session purposes, just to see what we get. All right. So now we got this push down, push up again, taking out that high. Now I'm going to trail my stop, and I'm going to trail it just below this bullish inefficiency right there. Now I do need to get rid of this again. I'll just bring it. Wait, where'd it go? Where'd it go? I'll just put it to the low end of it. All right, let's say 30 low. Could get a reaction there, but I want to see if this can push into these relative equal highs side of this. So there we go, perfect. So I think I'm gonna just end that one there on a little short session. That way I can try to get out of here and do something. I'll be back though later on. But yeah, that's the model right here. You can see tapping into that higher time inefficiency. You could have it drawn on if you want to, if it helps you out, but like this will look like that, like that right there. I don't even think we come to the 0.5. Oh yeah, we did. So inside this inefficiency, let me see this one real quick. Just so you can like, boom. Then I'll get, it lines up perfectly with the 0.5. So if it runs down here and you put fibs on this higher time frame gap, let me see that, put fibs on that higher time frame gap, boom, came down inside of this gap and touched the upper half. You want to see your higher time frame PD arrays respecting the upper quadrants. You don't want to really see it work below here. So when we came inside of here, while reaching the point or the negative 0.5, while also tapping the upper half of the quadrant here, you can see that 0.25, don't want to see it pull back to the 50%. And if it does, you want to see it run away fast. You don't want to start seeing it close on a 15-minute below the midpoint. So now we go down to the 1 minute. And that, not that we can't push up here, but this is why I try my stop here. And you wouldn't have got the fair value gap entry. This is one of those scenarios where we're talking about, like, a lot of times it's okay because you're not gonna get in every trade, and sometimes even these can be a failure. Like if I get on a closure, this could have easily just pushed down, but you can see the conviction in it. Came down to the 0.5, taking out this low, pushed up, market structure shift here, and we got one here. So let's say if this here is all the way up here, and then you just looking for the 1, 2, 3, that little high right there is your market structure shift as well. So you kind of have two of them. This show pre-one in advance. That indicates to you that, okay, we might be bullish, but this could be your confirmation depending on how you want to go about it. So once we get that move up higher like that, while stop loss is protected below this bullish inefficiency, and then price already tapped into. So you could have your stop loss there, but it is a little bit more riskier because price could just come back down, take out this low, tap into this inefficiency once more, and then go. Have seen that. But that is why, all in all, I put my stop there. And that's why I take these, because I'm not really worrying about all of this, because at this point I'm bullish, and we tapped this. We didn't want to go no further. Got stopped out on a, I don't think, oh yeah, it was on this trail, a trailing stop. So if we was going to be bearish, then I wanted to see it tank down to that -1. But we didn't do that. We ran away from that negative 0.5 and then displaced higher. So yeah, that kind of wraps up the session for today. And yeah, with a nice little solid session. Um yeah, let me see if it play out all the way up there, or what it do next. Kind of want to see. Just chop around. Boom. So yeah, you would have hit that target. Let's say you trailing your stop until we hit that 1 to 3, depending on where your stop is. So if your stop all the way down here like this, like where I originally had it from before, like if you want to be real conservative, then yeah, that's a nice stop loss. But then you gotta hold through this, and you have to be confident. You have to be confident, and it should give you confidence because it is higher time frame period, right? So if you got a larger stop, then a bigger risk reward, that's fine, right? You just aim for the midpoint. But dealing with this, right? You can trail stop. Would have gotten trailed out if you trailed it to here, especially after every 1, 2, 3 move, you trailing it. But if it starts chopping like this, and you still believe in the move, then you can just keep your stop under break even, or because well, you can see we took out that low, these relative equal lows. So if it's chopping, we got relative equal lows like that. Understand that price might range around and try to come back forward and then go. So if you want to give it breathing room, you got your stop here. You can just trail your stop. So if you're risking $50, now you can risk like $10 or something, putting the stop here, and then just letting it do its thing, regardless of its range. Because if it's gonna range, regardless, it can still run to your take profit if your analysis is correct. Which in this sense it is, because and it's high probability to do so because of the higher time frame and efficiency that we're trading from, and we took out some lows here, which is London lows, right? So we took out session liquidity low. So we took out London low while forming this opening range to the downside, right? Then we manipulate it here, do some manipulation, whatever, get our entry, and we target it. You could target the high too. right? You could target the London High, which would be here, but you don't need all that. You can really just aim for something simple consistently and then make your money. But yeah, that's gonna be it from you right there. And yeah, what a little good trade right there that was. That was here, like somewhere in there to stop like right there. So yeah, that was a nice little 1 to 2. About to call it there. And I'll be back later.